If you're here and you're an owner operator of a privately held business and you want a playbook to move from operations to ownership and stepping back from your business without blowing up your life and your cash flow and your wealth and your legacy, you're in the right spot. My name is Ryan Tansom, and I built this over the last 10 years after selling the family business. It was an 8-figure sale. I had to fire 60% of our employees the day we sold, paid 50% in taxes, and I went home and I cried. And this is the ownership playbook I wish I would have had. And I spent 10 years synthesizing all this information to figure out how can we move from operator to owner without blowing up our life, and we can build a business that gives us the freedom of time, cash flow, and wealth, whether we own the company or not. And I'm going to be walking through the Independence by Design framework for the owner operator to get into the ownership role in this quick video, so you can understand how to digest the website. You can go through my newsletter. I've got a podcast. And I just want to help you with all the information that I wish I would have had 10 years ago without scouring through all of the material out there that we're over inundated with. And I think it really just all starts with the reason we get into business, and the reason I've been an entrepreneur my whole life is I just want freedom. I mean, I know that word is used so much, but I want independence to do what I want when I want, whether I own the company or not. But we get stuck and sucked up into our operations, more L10 meetings, management meetings, juggling payroll, all these different things. So we get way too far away from this idea that we had when we started the business. And here's what I've labeled it and why that is. I call it the owner operator trap. And this hyphen is super important, this owner operator hyphen, because when you're VC backed or private equity backed or an ESOP or public company, it's very clear what the ownership goals are, and operations goal is to execute the ownership's goals. But we as owner operators, we get stuck in this ball of chaos, as you can see. And up here, this goal is independence. That's what we want, but there's no direct through line. And I see, what I struggle with is like, okay, we have all of this chaos that we have. And the reason that we have this chaos is because we're stuck in these gut-based decisions, and we have unpredictable cash flow. And you might have really good cash flow, but it could be lumpy, and you can't take, consistent owner distributions, or you can't see into the future what your distributions will be after working capital, debt, taxes, or growth. And then we get stuck in the operations doing a job, whatever job it is, or it could be lots of jobs, and it's this vicious loop. And what I experience, and I watch all the owner operators that I work with experience, is that we are down here and we have our time. So I'm going to walk you through. I'm going to do some drawings on this. We have our time and our cash flow that are coupled together. So over down here we have cash flow, and up here we have time. And when we're down in this box down here, we are completely stuck where our time and our cash flow are in this loop. And we have this vision of, I want freedom. And if I grow more and, grow faster, or I grow more revenue, more employees, more products, I'll eventually have more money in my checking account, or I'll have more freedom. But so many times that growth leads to more problems or less cash flow because growth is expensive. So there's this challenge and this goal, I think, where we want to decouple our time from our cash flow. And the even more challenging dynamic of the owner operator dynamic is we have this other line here, which is our wealth that is tied up in this business. So we have wealth that we have to, my father and I, we had 90% of our wealth locked up in this business. So we have this dynamic where we have our time and our cash flow and our wealth all commingled together, and we're just trying to juggle stuff to get to this ultimate goal of freedom. And I think there's this huge misnomer of like, we have to sell the business to get the freedom. I learned the hard way that's not the case. And this owner's playbook that I'm going to be walking you through shows that there is a path forward where you can actually step back from your role and keep the owner's distributions and continue growing wealth. But we want alignment and see that through line to see how do we get there, and what is the trade-offs that we have to get to our goal. And that's what we'll walk through in the Independence by Design framework, which is a framework for the owner to think about how do we get escape velocity out of the operations to create as many choices as we want, whether it's scale the company, sell the company, step back, collect distributions from the boardroom, It doesn't matter, but what we need to do is clarify our goals and have a framework to do so. So that's what I worked on for the last decade, is creating this framework that you can see here. And so as we can see, we have got our cash flow over here, that our cash flow, and then we have our time, and we want to decouple them. As you can see here, that we're decoupling them, and we need to then understand, how does that impact our wealth? And we have to have a plan. And so I'm a geek, and I read the book The Goal years and years ago. I was in IT services, so I got into complex, systems, and the reality is we can't do it all at once. And so there has to be a process of creating escape velocity. And what escape velocity is, like, and I don't fly rockets, but when you launch a rocket out of the atmosphere, it has to circle the atmosphere to then get out of the gravitational pull, and that's escape velocity. And think about it like you've freed yourself from that gravitational pull of the operations, and then you can do what you want and sit down and think and have choices and do more of what you love. And there are 3 phases to the Independence by Design framework. Each phase includes 3 different modules that I'll walk you through quickly, because this framework is how all of my content is organized in the playbook, in my podcast, and I'm going to continue enhancing my YouTube channel, my newsletter. All the training's going to continue going up, or continue pushing out. So I want to provide just valuable content that I wish I would have had. And I've got a coaching business that you can check out as well, but you don't have to join that if you don't want. My goal is to just help everybody, just thinking about what I wish I would have had 10 years ago. So the first thing that we have to do to understand our constraints is we have to, I'm going to change my color here. I'm going to do it blue. We have to plan for the future. We have to understand our ownership goals. We have to take the ownership red pill, which is, I think, is understanding valuations, understanding what does the game of capital and capital allocation mean. And we have to plan for that future and understand what are our goals of cash flow, time, and wealth. And then once we have that plan and we have our constraints and our goals, then we can build a valuable business. And building a valuable business means we have to set up the financials correctly so we can see our owners' distributions and really become a capital allocator, understanding the cash flow and the trade-offs of reinvestment versus distributions, building sustainable margins. And then once we have that plan, it's way easier to then elevate out of our operational role into the ownership role. But we can't just pray and hope, I've seen it so many times. 450 podcasts and a couple thousand people through my workshops. The people just, like, they're so burnt out. They're like, they either sell and they regret it, like I did, or they just hand it off to some, C-level executive, but they didn't plan, they didn't build a machine, and there was nothing to hand off to actually elevate to. So they had a blissful, call it 12 months, 24 months, but then the thing started to wobble and then they got sucked back in. So if we want to get ourselves the highest probability of actually creating this escape velocity to independence, we need to think like an owner and have a framework to understand how to decouple our time from our cash flow while generating wealth. So I'm going to give you a quick little snapshot of each of these 9 modules, and then I'm going to walk through the independence flywheel, and then I'll give you a quick exercise, and then you can go off and can hopefully consume some podcasts, some training material on the newsletter, and again, just start your journey learning. So the expand knowledge module is all about learning about ownership. And by ownership, I mean valuations. Oops. Oh my gosh. There we go. I can spell, I promise. Ownership and valuations, understanding capital allocation, and it's really understanding the trade-offs. If I reinvest my cash back into growing value, we have to understand how valuations work. We have to understand what it means to be an owner. How does private equity work? How do the different ways and ownership structures work? There's a lot within this, and I've got a lot of trainings and education on that. Then we need to clarify our goals, our ownership goals. And that is of time. What do you want to do with your time? What do you want from your cash flow? And what do you want from your wealth? And then how does the business fit into that? And then over here on drive strategy, we need to have monthly, quarterly, and annual meetings for the ownership. So think about it just like a private equity firm. It's not about selling to private equity. So don't get confused with that. But you will have private equity. You have a business that's an asset. So we need to have a monthly meeting of budget to actual, what's going on with the financials, just like a PE firm would with their CFO. We need to have quarterly board meetings where you're thinking about bigger, higher level capital allocation, tax strategies, mergers and acquisitions, and then an annual planning meeting to say next year, what are my goals for distributions, for value creation, and then how are we going to drive the strategy of the company. Then with the build a valuable business, there are 3 modules within that. So the first one is the optimized financials, which is a 3-statement forecast and financial model. So that 3-statement forecast allows us, when we mathematically tie the 3 statements together, we can see into the future working capital, debt, taxes, reinvestment, and owner's distributions. In the cash flow statement, and the only way we can get the cash flow statement is if we tie them all together, we can see into the future all of our capital allocation decisions and how they impact our valuation. But we have to understand that, and we have to then build out the financial model. The maximized growth is about maximizing gross profit at sustainable margins and making sure that we're scaling the right products and the right services to actually generate the cash flow that we want. And then we can then tie those financials and the margins to Oh, I'm sorry. I messed this up. So that is the scale operations. But before we do that, because these 3 buckets are tied to the income statement. So the maximized growth is creating a predictable revenue engine. So we need to have the right strategy and the right sales and marketing customer journey with the right client acquisition cost that lands predictably the revenue in the income statement every single month. Then we can then maximize the margins. So we want to increase the throughput. 3 constraints, the goal. We're constantly just opening up that bottleneck to have more throughput at the right margins, at the right products and services, and we can track those with the financials. Then we go down into the elevate phase. Then we can then take our 3 executives. Someone has to be responsible for revenue, so chief revenue officer. Someone has to be responsible for margins, chief operating officer, and then someone responsible for the financials, the CFO. We need to elevate our bench, make sure that those people are owning their 3 buckets, and then those 3 buckets are tied to the financial model that we built out and then the previous phase. This is where we have the A players and people that can think. I don't know how else to put it. Like, we need thinkers, we need strategy, and we need people that can think, and we also need accountability. Sorry. You can kind of read that. And then we can incentivize growth with short-term bonus plans for the executives. So think about them, the chief revenue officer is obviously revenue and the different product and service lines. The COO, the operations manager or service manager or integrator, whatever you want to call that person, is responsible for the margins of the product lines and service lines. And then we have the CFO, who's responsible for cash, normalized EBITDA, net income. So they're also tied to those 3 buckets. And then that short-term bonus plan, then we can take, and then we can actually look at a long-term bonus plan. Think like phantom stock. There's a lot of ways to then incentivize. If you want to go from a $10 million valuation to a $15 million valuation, are you willing to share in that upside? My quick rule of thumb is only share, don't give. Use that, eradicate that word. We only want to share in the growth that people are creating. So we want to make sure that this is being pegged off of your net worth goal and the valuation goal based on the funding that you have provided based on the financial forecast. So we can completely align that team built out in a sustainable way. So then they're driving the behavior. And then the last one is replace yourself. And this is by replacing your job. You don't have to sell. You want to step back in the boardroom. I've got plenty of clients, people I've worked with where they're literally sitting in the board. They have quarterly meetings. They're looking at on track, off track, looking at owners distributions, focusing on mergers and acquisitions, all that kind of fun stuff that I think we all like, but we're not doing the day-to-day work. And this will create us options. There's a lot of psychology that comes in here too. Maybe you don't want to exit your role because you've got a lot of identity tied into it, or you love it, but we need to understand that dynamic. So these three phases are then allowing us to create this escape velocity so we can have as many choices as we want. And what that creates is what I call the independence flywheel, which is how you spend your time and money creates this independence escape velocity. And the momentum, and I love this word, this momentum, and it's about alignment, that you know how you're investing your time, cash flow, and wealth creates more momentum. So this is based on the theory of constraints. So we want to increase our throughput, but we have constraints. And so what I've boiled down over the last 10 years is it's really three constraints that we all have as an individual. And as a business owner, we have a business that fits in with our personal constraints. And the first one is time. It's the universal constraint. You know, I've got this Life in Weeks poster up here. My wife thinks I'm very morbid, but I got to 90 years and then we drop dead. And I want to make sure I have the best life ever. And I think so does everybody else. And we think the business can help us achieve that, but we have to spend our time working. And that's what a lot of us start doing. And a lot of us are still doing, but we spend that time working to generate cash flow. And that starts off, and I'm going to go over here and say, so that starts off through that working. But what we want to do is take that cash flow and then reinvest to create wealth. And that wealth could be the business equity that you have. It could be other outside assets. It could be real estate. It could be gold, Bitcoin. It could be the S&P 500. But the whole point is that we are reinvesting or investing into wealth that then what the wealth does, and the whole point of having wealth is to give us income that's not tied to our time. So we want to constantly generate wealth that decouples our income from our time. And when I look at this flywheel, in the center is that's that independence. So we want to create independence, but what we're doing is we're taking our time, we're investing that time into cash flow, and that is our job. But we can also create cash flow from our distributions. So we want to increase the availability of ownership distributions while also reinvesting and funding for growth so we can then decouple our time. And every decision we have is a trade-off of these. So you can reinvest more cash flow today, hire an executive team, put in an ERP system, buy a company, but it takes cash. The whole goal is that we have wealth. Well, if we can't see the return, then we're just guessing. And I want to take the guesswork out of all of this. And if we take the guesswork out of this, we can create this independence escape velocity. And I have worked with people where they can do it, where their time and cash flow has been decoupled. They're sitting in the boardroom and they can see, and they become a capital allocation machine. It's all about decision making to make sure if I keep investing, am I growing more wealth? Or if I'm taking more cash flow out, that's okay. But what's the trade-offs? And if I'm going to spend my time, I want to make sure that I have more time freedom after this. And I just want to take the guesswork out of all of this. And this owner's playbook sits on top of your operating system. So you might be running EOS or scaling up or OKRs. That's the operating system where you've got the org chart, the accountability, but you're the input. Like you have to have the input to say, what do I want out of my time, my cash flow, my wealth, and in what timeline? Then the business becomes visible of like, how do we use the business and the levers within the business to accomplish my goals? So now what I want you to do as I wrap up here is this is one of my favorite words recently, and it just continues to resonate with me, is align. I want your alignment score. That's supposed to say alignment. Okay. Well, anyways, the iBD alignment score. And alignment is where I know that the hard work that I'm doing today is going to provide a return tomorrow. And that could be a return in meaningful relationships and impact that I want to make, more freedom, but it really all hinges upon my time, cash flow, and wealth. So what I want you to do is for each of these, on a scale of 1 to 7, how aligned do you feel right now with how you're spending your time, cash flow, and wealth? So a 7 is very aligned and a 1 needs work. So, and that where this kind of bubbles up and how you can think about this is like, I don't know if I'm spending my time doing the right stuff, or I'm not very confident in my cash flow, or I'm just guessing right now, and I'm not really sure if I'm going to be able to sustain that long term. It could be the business, it could be your personal, and a lot of that's commingled together. But we're trying to figure out: do you feel aligned or not? And then with your wealth, do you feel aligned? Scale of 1 to 7. Your total score will be out of 21, and the lower the score, my guess is the more anxiety and the more frustration you feel, because you're not sure if what you're doing is worth it right now, and it could be in any of these categories. And I want to help you answer this question right here. Is what I'm doing worth it? This is, I think, the source of all the anxiety I've had in the past, and I want to help you clarify that up. And the first step is just take out the PDF. You can grab the PDF in the download below. I've got a link, and you can fill out this sheet, or you can draw it out on your own if you don't want to. In the email, all I'm going to do is add it to my newsletter, where I've got the trainings and the podcast. There's not going to be a bunch of spam. I do have options for virtual workshops, and you can select what you want to sign up for. But I just want to provide more and more resources for my audience and the owner operators out there who I think deserve the independence and to get rewarded for the hard work that you've been putting in, and to be able to love your business and love your life again, and be able to step back without blowing everything up. And one of the first things that you're going to have to do after you fill out that alignment score is clarifying your goals. And this is the second module, because we have to clarify what we want out of our time. Let's see here. Time, what we want out of our cash flow, and what we want out of our wealth. And the number one thing and the reason I got expand knowledge as the first module is because understanding how business valuations work is the best way to take the ownership red pill. And I've got a picture of Morpheus. It's a blue pill, red pill. Blue pill is just be a worker, solve for your K1, and just hope it all works out. But the red pill is, I want to understand business valuations, and I've got 3 lenses of business valuations to hopefully make them make sense for the first time. There's some technical stuff in there, but like, I've learned this all the hard way. I got a D in accounting, and I'm just trying to help other people understand what is the game of capitalism and ownership, so that way then we can clarify our goals. So the goal will be to get your goals clear, but learning how business valuations work and learning what your trade-offs are is going to be the first step. Go check out the Beehive newsletter that I've got. I've got 4 different articles. It's a 4-part series, but it's 3 valuation lenses that'll help you understand what I'm talking about and how to think about the business from your owner's utility lens. Like, what is this business worth to me? The market valuation lens, which is what are the 4 KPIs that the market values: normalized EBITDA, the multiple, net debt, and working capital. And then the third valuation lens is in a deal. What are the deal structures and who are the different types of buyers, and how does that change the market lens and what I want? So it's just kind of a way of stacking the lens on top of each other, or so that way you can actually get context to your decisions in front of you. Hope you enjoyed this video. If you got any questions, feel free to reach out. Follow me on LinkedIn, or my YouTube channel, or my podcast.